a lot of you may not understand why gold is dropping, and I want to show you guys exactly what members in our community are looking at, and by giving you guys a quick rundown. Almost nobody understands why gold is dumping right now. War is escalating, oil is surging, and inflation is coming. So why gold is falling? That is the question most people are asking over and over again. And everyone thinks gold should be flying right now, but instead it's dumping. So I'm going to show you guys what's actually going on. The most important thing you can see here, of course, is from the 3rd of March, okay, the 2nd of March on a Monday, down to the 20th of March. So within 18 days, okay, we have seen gold drop off 17.4%. 17% is a crazy drop off within the space of a month. Within the space of one single month, that's what we've seen. We've seen the highs and we've seen it come down to the lows. Now, gold, for those of you who don't know, is a safe haven. It's a hedge against inflation, right? So logically, gold should always be going up. And traditionally, gold performs best during fear, inflation, and uncertainty, which is exactly what we have right now. A massive cloud of uncertainty, right? Well, here comes the confusion. When we have a look at oil, okay, oil equals inflation going up. If the price of oil goes up, inflation goes up. And usually, guys, if the price of inflation, if inflation goes up, gold will rise up with it. But not this time. Oil is rising, which usually leads to inflation, and that should push gold higher. But the market doesn't always follow what's obvious. And that is where we're at right now. So if I'm honest with you guys, going back over to gold, just so you guys can understand, because sometimes it's really easy to get caught up in the hype of what's happening around us. For example, gold is coming down. Some may now think it's going to keep coming and coming and coming. But you have to also look at the bigger picture here. And if we zoom out, we can actually understand that, hey, this time last year, from March last year to this year, gold's gone up almost 100%. It's pretty much doubled within the space of 12 months. And if we think about where we're currently at right now, well, we're still sitting over 50%, around a 58% profit. So we're already up 50. Gold has already doubled, you know, it's more than doubled by half. So for you guys to understand this, markets are still forward looking. We're still going in the right direction. It's like when Bitcoin went from 1,000 to 10,000 and it dropped down to 3,000. Everyone said Bitcoin crashed. But if you look at the overall trajectory, Bitcoin's gone from 1,000 to 10. Even if it's at 3,000, it's still ahead from where it was. So in actual fact, although we're seeing a massive pullback right now, we're still ahead, guys. Okay, from a year-to-date perspective, we're up 58%. And of course, for us traders, we want gold to come down as much as possible, because the more it comes down, the better the pullback. Gold has been riding high for so long that this was inevitable. Really, it just became a case of, were you going to be someone that caught these shorts? Are you going to be someone that's been able to make history? Because that's what these shorts are going to be. These shorts are going to be historical moves. Gold was bullish for a whole year. We had bullish price action with gold. And now, over the past few weeks, we're starting to see gold now declining because of what's happening. These are going to be historical plays that we are going to be giving trades, as we have been inside of our Discord community. So make sure you guys are clicking on the link wherever you see it in the description. Follow the steps and get inside our community. It is free of charge. We've given out over 7,000 pips this week on gold. We only send out trades on gold. So we have been murdering gold. But the real driver here, guys, is central banks. Okay, gold's already made a massive move. As you can see, it's already made a massive move to the upside, right? We had a 100% move inside of 12 months. The market isn't reacting today. It's pricing in what's coming next. And that's the central bank's decisions, the interest rate decisions that are set to come. Now, it's most likely that rate hikes are going to happen. Interest rates will increase. And because of that, gold is just positioning itself early so that when these things do play in, we get the moves that, of course, a lot of analysts will be forecasting. Now, look, the more war continues to go, the more war continues to grow, this is going to have a negative effect on gold right now. And if I'm honest with you guys, I've said this to my students many times before. The markets just look for excuses. They look for news events as excuses to pump the price, right? So with these events that's happening right now, it is just an excuse for prices to pump, or in this case, to dump, okay? So even if we have a look at silver, okay, silver over the past year has gone up 290% inside of 12 months. It's incredible. 290%, right? Where we're currently at right now, however, is over 117%. So it's still a great investment. Even if it has come down over 100%, it's still a great investment. We're still net positive and we're still forward looking. Nothing is actually bearish yet. Okay. So Europe are now pricing rate hikes, not cuts anymore. They're looking to increase their interest rates. So big shifts in expectations. Just days ago, markets expected rate cuts, and now they're pricing in rate hikes. That changes everything. And that is also a huge reason why we're seeing a descent here when it comes to these commodities. So the Feds may hold rates all year, the Federal Reserve, and even hikes back on the table. So if we go over to the dollar, let me go over, make this a blank canvas just for you guys quickly. So the Fed may hold rates all year. Okay, they may keep the rates the same the whole year. However, if they don't keep the rates the same the whole year, then they may hike the rate back up. And of course, we all know Jerome Powell is set to step down. Of course, what's happening right now with the price of oil, with Iran, if Iran are going to close the borders, close the gates, for the US in terms of them doing business, then actually what that means is there's going to be inflation worries all across the board in the US, and it does mean they most likely will be raking a hike. So it's not just Europe, the US is doing the same. Higher rates for longer, and possibly even more hikes will come due to the continuation of this war. Donald Trump actually tweeted today and said there is a he said, well, we're giving around 48 hours before we break down this door. If they don't turn around within 48 hours and let us and continue doing business, then all hell's going to break loose. There has been there's been some key bases been hit. Here it is here. There's been some key bases hit on both sides, to be honest with you guys, with Israel as well as in Iran. So Iran are looking to go to war with the Middle East in terms of them looking to take out their bases, because Iran's biggest depot has been hit, which does, I believe, 15% of that contributes to the business they have with China. Trump has said if Iran doesn't fully open without threat the Strait of Hormuz within 48 hours from this exact point in time, the United States of America will hit and obliterate their various power plants, starting with the biggest one first. Thank you for your attention to this matter, Donald Trump. So yeah, guys, it really is kicking off. But why does this kill gold? Okay, because that's the question that most of you probably haven't yet got answered. Why is this killing gold? Very simply put, higher interest rates equals a stronger United States dollar. Okay, and if a stronger United States dollar, which I had here on the screen, takes me back to here, a stronger USD, right, means that gold would come down. So we understand this. When interest rates go up, the dollar becomes more attractive. Money flows into the dollar and money flows out of gold. It's that simple, guys. If we see a strong dollar, we can expect to see weaker price actions with gold. Okay, this isn't fear-driven markets. This is now a state of policy-driven markets. We now need to be paying attention to what's happening with the policy, with the policies that's set to be released by the central banks. Right now, it's their game to play. And it's for us to take heed of what they're saying, which is the reason why me and the team inside of the Liquidity Network will be keeping up to date every step of the way with what's happening. Gold right now, guys, naturally speaking, it's just unwinding. Okay, it's just simply unwinding, which it has to do. There's a few areas that we could expect gold to come down to. And if I was to highlight them, well, one zone is here, another's got to be within here, another's got to be within here. So, you know, we can't be upset if gold now bounces from here, or if it comes down lower and bounces from here, or if it comes down even lower. The lower it comes, the better it's going to be. We would just hope that we can get a pullback along the way to ride the short down with it. But nonetheless, this isn't about war or fear. It's about money flow and central banks. That's what most people are missing. Most people react, we position the liquidity way. So guys, thank you for tuning in, and I'll see you guys on the next one.